Good morning, traders. It is Tuesday, January 28th. We're an hour into the open. Let's see what the market's doing. We had the SPY break below this upward sloping trend line. It also broke horizontal support yesterday at SPY 325, and we had a bearish inverted candle. Things got a little bit overdone. That 325 support level is holding right now, and you can see that the market is on its high. Let's go into the SPY chart. And you can see here that we're grinding higher. We broke through that SPY 325 level and things look very, very good right now. We also had this 1OP cross right here. So the first few bars of the day are going to tell us exactly what's going to happen throughout the course of the day. Sometimes we get a nice clear message from the market. Sometimes we don't. We have to wait and see what's unfolding. So today, excuse me, we had an inverted hammer, no good. We had a long red candle closing on its low, no good, but we still need a little bit of time to see how things are unfolding. I'm expecting a sideways market, a little bit of choppiness, major news coming out, big earnings tonight after the close, Apple, Microsoft, Tesla tomorrow. So major earnings announcements, Amazon on Thursday. So I think the market's going to be a little bit sideways in the early going. So what I saw was this nice bullish hammer here, and this green candle almost erased all of those losses on that red candle. That's interesting. Nice long tail under body here. Market closing a little bit higher at the upper end of that candle. So this is a bullish hammer. Another nice tail underbody. Another nice tail underbody. Well, what else is happening? We've got a bullish cross by the 1OP indicator. This is an option stalker. If you're an S&P 500 trader, it is all you need. It is all I use to trade the futures. So it's giving me a buy signal here on a bullish cross. We've got this resistance right here that we're starting to work through. I'm long the market. And I'm going to go into the chat room and I'm going to prove it to you. Here are my opening market comments posted 10 minutes before the open. I'm going to continue to scroll down. You can see my market comments are extensive. I'm trying to tell everybody what's going on. And as we continue to scroll down, I'm telling everyone I'm either going to be selling an out of the money bearish call spread if I want to short the market, or I'm going to be selling a bullish put spread if I want to be long the market. The reason for that is that option implied volatilities are a little bit elevated right now after the market decline, and I may have a drop in implied volatility working in my favor, and also time decay will be working in my favor if my scenario plays out, which is a relatively flat, choppy market with a slightly upward bias. That's why I selected that strategy. My market opinion drives every single trading decision that I make. And that's where novice investors go wrong is they zero in on a stock, they get tunnel vision on that stock, and they're oblivious to everything that's going on around them. The market dictates everything. That is your starting point. That's why every video that I post starts with the market. If you get that piece of the puzzle wrong, there's a 75% chance that whatever trade you do, you're going to lose money on. So, enough preaching. Let me continue to scroll down through the chat room, and I'll show you that I'm pointing out trades that I like. There's a Walmart bullish put spread, February 14th, 114, 113, 15-cent credit. I like that bounce off the 200-day moving average. And there we go. Here's a bullish put spread that I'm looking to sell. I had already told everyone which one I'm looking to sell, and now I sold that for $1.31. That was the SPY January 31. It expires this Friday. Sold the 325 puts, bought the 320 puts, did it for $1.31 credit. I like what I see so far. This is 24 minutes after the open. Get long. Stocks. Strong stocks. Exclamation, point, point, point. Cap letters. We're back above 325. Here's a stock trade that I did. Long SQ. This is 26 minutes after the open. If you're looking to come in here and just bang S&P trades out for a point or two profit all day long, you're not going to be happy with the chat room. That's not what I do. It's quality, not quantity. I'm looking for nice, big, high probability moves that I can get behind. Sometimes we might have 2 or 3 of those a day. Sometimes we might not have any. I am not going to force a trade and go into a low probability trading situation just to post trades in the chat room. That's not how I operate. So, a handful of nice stock trades every day? You betcha. I'm going to be looking for those as well. But quite honestly, that's why I posted these unbelievable stock searches in the chat room. They update every minute. These are the stocks that you want to be focusing on. Oh, by the way, there's SQ right there. So, folks, that's what you get. Let's take a look at that bullish put spread. Let's see how that's doing right now. I'm going to click on the options chain. While that's loading, you can see long green candles closing on their high. A little bit of a pause here, and then boom, next leg higher. A little bit of a pause, next leg higher. The market is in this gap, and it's going to continue to fill that gap probably most of the day. And you can see that gap right there from Friday to Monday's open. So we're going to go down. We're going to click on the bid of the 320 puts, and actually we'll click on the ask, and we'll go to the 325 puts, which are right here. And we can see that that spread is currently trading 91 cents bid, offered at 94 cents. So on that spread, I'm already up 40 cents on that spread. If I did a 10 lot, I would be up $400. That's how we play the game. I'm still expecting the S&P 500 to move higher. I will have time decay working in my favor all day. So I want to put up the VXX very quickly because it's going to illustrate a point. VXX, you can see this measures option implied volatilities on the indexes, the S&P 500 specifically, and you can see how it's dropping, dropping, dropping. If I am a call buyer, that premium is being impacted by a decrease in implied volatility. That's working against me, so I'm swimming upstream. Also, if I buy options that expire in a week, time decay is constantly working against me. So I have both of those factors working against me early in the day. Might I shift to a call buying strategy or a put buying strategy later in the day? Perhaps I will, and I might even go with weekly options that expire this week. So we'll have to see how the market plays out. I think we're going to see a nice grind higher. So let's go back to the bigger chart and let's take a look at SQ and why I like that particular stock. Look at that beautiful breakout. Here's what the stock did yesterday. Very, very weak day in the market. So I highlighted SQ and I said, hey, this stock wants to go. Today, market's still figuring out what it wants to do. What is the stock doing? Zoom. I got long that stock right in here. Took about a 75-cent profit on it. I'm in, I'm out. Really nice gain on a $75 stock to make a 75-cent profit. Beautiful. This stock still looks like it wants to go higher. So we've also got a number of other stocks that look like they want to move. Apple announces after the close today. It has really nice momentum right now. It's starting to fill in that gap along with the market. Long candle closing on its high. It looks good. Here's a warning. Stocks that announce after the close today or before the open tomorrow are going to be relatively choppy. You're going to see some position squaring in them. So be very careful when you're day trading these because what looks great early in the day can change very, very quickly. Microsoft announces on Wednesday. That also looks good. Look at it fill in yesterday's gap completely. Microsoft and Apple are both stocks that, and Microsoft in particular, tends to rally ahead of the earnings announcement. So Microsoft looks really good. It's already filled in the gap from yesterday. It's moving higher. So I do like that stock position as well. And I'm going to conclude this video pretty quickly here because I just want to watch what the market's doing. I think we grind higher, we fill in this gap. Now let me give you a little bit of a picture on a longer term perspective and talk about what we need to be careful of this week. So on a swing trading basis, I don't see getting real aggressive today. Yes, this was a nice dip. Yes, this is what we've been looking for. Coronavirus is spreading quickly. There were 4,000 cases yesterday. There are 8,000 cases today. It's doubled overnight. They feel that the virus can be spread before the carrier even shows signs of symptoms. That makes it even tougher to control. So all the airport screening and everything, not really going to matter. So we can expect coronavirus to be worse. It's happening during the Lunar New Year in China, which is a huge, huge holiday. So it is going to impact China's economic activity. It will have a temporary effect on it, but I think that we are going to see the market try and rally in here. Then we've got major, major earnings Tuesday through Thursday. In fact, more than 20% of the S&P 500 will report in terms of market capitalization. How Apple, Microsoft, Facebook, Amazon react after the number will dictate where the market goes. We'll find out if the market has any gas left in the tank. Very important information for us to wait on right now. There's no hurry. I don't feel that asset managers are rushing in to buy stocks at a forward P of 18, feeling that they'll never get a second chance to buy. No, I think this is an evaluation process. I've been mentioning for weeks that I was looking for a range on the S&P or SPY between 335 and 320. Well, we almost got to that 320 level. I'm looking to go sideways for the next month, maybe 2 months. So that sets up well for selling bullish put spreads out of the money. Let's wait for a little clarity for the next 2 days. We'll have all the puzzle pieces. Then we'll be nailing those strong stocks after earnings. That's the game plan. Sell those bullish put spreads below technical support. Lean on that technical support with the notion that the market is not going to be making any big moves downward, that it'll be sideways, and we'll take advantage of that time decay and the strength in the underlying stock. So that's how we're going to be playing it. Please make sure to subscribe to this YouTube channel and turn on your notifications. You never know when I'm going to be posting a video. Sometimes I don't have time to, sometimes I do, sometimes I see something really compelling. I can assure you that every one of them will have an actionable trade in it and lots of education. Thanks for watching. Good luck with your trades. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.